Hello everyone, welcome back. So going to be doing the pre-market analysis and look ahead here in a pre-recorded format. For some reason, I think it was the OBS YouTube integration that was given problems, because then after I just got done with like a 2.5 hour Zoom call with clients and everything was good there. So not sure what's going on with YouTube's end, but no worries. I'm still going to deliver the value, let you guys know what I'm looking at going into this week. So with that, we'll get right into the intermarket analysis. So starting with DXY 3-month chart, we have this range here, impulse range from low to high, and we've retraced down into a discount. More specifically, the fair value gap here, that also overlaps with the bullish breaker. So what we're looking at here is an intermediate term, longer term perspective. And this is something I like to do at the reset of every quarter whenever I'm gaining my bearings for longer term analysis. So you've traded down to the discount, into the fair value gap. This is staved off lower prices, and we found support here. So seeing that we got a bullish close here in the previous quarter, I'll expect that strength to continue here into this one, making a run for this high. And if we continue, we've dropped down into internal range liquidity, so we could potentially see that external here moving forward, especially if we continue to get strength in the bond yields. All right, so monthly chart, if you guys will recall, last week I took your attention to this high here, the 104.976 level, and that was this monthly high here. So this is a key monthly high. Liquidity is referenced in the hierarchy of importance based off time. So because this is a previous month's high, that's going to be a significant higher drawn liquidity. And if you guys remember, I called that to you guys last week, and we finally got those targets delivered there. So above this high, we have this balanced price range here to contend with, where these two fair value gaps overlap. So if we're going to be bullish, I want to see this monthly candle trade above, close above, and start working its way into this high here. That's, again, if we're going to be bullish, and we saw a strong close here in the previous month and looking to continue that momentum into this month here. All right, so weekly chart, we have the swing high. Again, that was the draw. That's that same monthly high, just dropping down through the time frame. So as you guys can see, this is also a clear swing high on a weekly chart as well. So when the market traded down into a discount from this range low to high, from here to here, we traded down into the discount, inversion fair value gap, finding support from that discount, and then aggressively displacing away. All right, so that's how I've been able to give you guys the bullish bias the last 3 weeks, and that's been absolutely money. And we see here we reprice into those sell stops actually today. So moving forward on the weekly chart, if we're going to see continued bullishness, I want to see this fair value gap here actually be a breakaway gap. So I would prefer this fair value gap here not be traded to at all, and we leave that open if we're going to be bullish longer term. That's going to depend on how we trade above this high here. If we're going to be bullish and start to make a run for these smooth bodies here, and then eventually these equal highs, we need to displace through this high here. So if we're going to get here, we need to start trading with animation through that, and then giving you guys the qualification of a breakaway gap that I don't want to see this range filled in here. So that can stay open, and that would even be better for higher prices. All right, so daily chart, ever since we've been down here, we've been looking for lower prices into these equal highs. When they retraced it on us here, we were still sticking to our guns, looking for higher prices. Namely because of what we've been seeing on the yield market as well. Confirming what I'm looking for in dollar with bonds gives me a great advantage in being able to confirm or qualify a bias that I'm looking for. Right, so when they left these equal highs here, and then they retrace it, I'm looking at this as a retracement and a continuation, because they left those equal highs. And also looking over here at the bond market, yields have been exceedingly bullish, but we'll take a look at that in a moment. So looking at the daily chart here for dollar, looking at last week, get some context so that we can then look forward to this week here. So if you guys will recall, last week I gave you guys the bullish breaker here, this last up close, and this last down close here, which is a bullish order block. I told you guys, if the market's going to be bullish, we're going to find support at this level here, right? Not a random zone, very, very specific levels. Bullish breaker and order block. We didn't have the fair value gap at the time of the recording because I'm giving you the analysis before this candle even starts printing. So if we're bullish, we want to see what? Some type of drop early in the week. Classic Tuesday low a week when we're bullish. Telling you where it's going to turn from. Bullish order block, bullish breaker. And then what were the targets I gave you guys last week? The volume imbalance here. As target 1, And then target 2 would be this high here. Last week, Tuesday low a week, Tuesday, Wednesday, Thursday expansion higher into the volume imbalance. So again, you see why I didn't just give you this target here, why I gave the volume imbalance as a first target, because we didn't even get up to here last week. But we did run into that volume imbalance. And just that right there is enough range to look for shorts in foreign currency or any other risk-off asset. So beautiful delivery, hitting the levels we're looking for, calling the low of the week based off key levels and the high of the week based off key levels. How it's going to deliver there is going to be based off a narrative. So I'm telling you it's going to make the low first, then the high. How do I know that? Because the narrative, we're underlyingly bullish. So we make that high on Thursday. And then now looking at this week here, we have a volume imbalance here. We see this candle open, low, find support at the volume imbalance, and we're bullish looking for this high since last week. And then beautiful repricing into that. So if you guys will remember, the targets I gave you above this high here was the inefficiency here, this purple rectangle. So above that, we have this purple rectangle here to trade into as an upside target. Above that, we have the buy side here at the 106.006. So we'll just call that the 106.00 big figure number as a draw on liquidity on the upside. So again, clearly seeing bullish order flow on the daily chart and not expecting that to change. So when we go into stock indices, keep in mind what we're seeing on dollar, because that's going to weigh on indices as well. So actually, I'll drop down into the hourly chart. And then you guys will also recall looking at the 4-hour. Remember when I said last week, how far can we go? Remember, I took your attention right to this bullish breaker and to that 4-hour fair value gap. It drops right into that. I'm giving you the key levels smart money's going to work with. So they're dropping it into these discount arrays at what time? Tuesday. What are they going to do? They're going to use that drop to reaccumulate their long positions to do what? Deliver into the targets I'm calling for you before the week starts. So it drops down. How far can it go? Fair value gap breaker. It's not going to go below that. There's no need to. Hits that, reprices higher into the key targets. So still going to look for continued higher prices. So this is the current new week opening gap for this week here for dollar. Open with a gap lower, consolidated inside that gap, use it as support as we would expect in gap theory if we're going to be bullish, and the market just tears off higher, making the high of the day, time of day at 11 o'clock. So trading into that buy side beautifully. So as long as we continue seeing bullish order flow, again, I'm looking for higher prices on the hourly chart. But again, keeping in mind it is also non-farm payroll. So with that, I'll go ahead and transition right over to Euro here briefly. If you guys will recall, we had these equal lows here in Euro last week. So I know Euro traders banking here off the analysis. And then I told you guys, here is where we close on Fridays, where we open on Monday. I told you guys these equal lows here and here, that's too smooth. But it's even better if they leave those lows intact and take it higher. Why? Because now people are seeing this as what? Support. Or a new supply zone. Or the market's going higher. We're bearish Euro. Why? Because I'm bullish dollar. So remember when I'm taking your attention to key levels last week, remember I told you how far can this thing go? Up to the bearish order block. And the bearish order block's right here. So we trade into that level, but look at where the bodies stop at the low end. It can trade up to the opening. Fair value gap, order block overlap. That creates the high of the week. And then I told you guys these lows here were in the crosshairs. And then this low here if we get animated down through that. So the analysis I gave to you guys on currency and dollar, absolutely banking. And then looking at pound, we see the same thing here. Looking for higher prices on dollar, so we look for lower prices on foreign currency. And then what do we have here? Equal lows here, here, and here. So that still remains the draw moving forward. All right, so moving right along into the yield market. One second, zoomed in here. So we're still seeing bullish order flow. As long as down close candles continue to support price, I'm looking for higher prices on yields. So the higher yields are also going to be met with higher dollar. So as long as we continue to see higher prices on yields, that's going to further confirm what I'm seeing in the dollar index. And then we're going to talk about the implications that's going to have on stock indices. But again, seeing higher prices on yields, and I'm going to be looking for higher prices. We have relatively equal highs here, relatively equal highs here, and here. I expect that to be the draw going into the remainder of this week. And then how we trade there is going to be influential. If we're going to be significantly bullish, I want to see us trade through these highs and aggressively displace through them on that weekly chart. All right, moving right along into the daily chart. As I told you guys, they left those equal highs there that we can see much more clearly now on the daily chart. And then they retraced it down into the reset fair value gap here, here, and then here they did the same thing. And then we saw a nice impulse run today higher outside of discount from the fair value gap. So what's that telling me about the institutional sponsorship? It's bullish, right? We're looking for higher prices. And what you'll notice here, the size of the ranges here are indicating that we're going to see larger ranges moving forward. Look at the size of this candlestick comparably to the other size of the candles. It's bigger, right? So what that's indicating, what that's tipping its hand to, is that we're likely going to see bigger ranges in bonds, dollar, indices, across all asset classes. And we expect that based off a timing element because we're also going into quarter two as well, right? So also this displacement higher further confirms what we're looking at on the dollar, which is higher prices. And again, using the bond market to confirm that for the weekly analysis. All right, so moving right along. Weekly chart here for E-mini S&P. Get zoomed out. All right, so indices, as you guys know, have been on an absolute tear. So I do not want to be the one that's trying to call a top every single week. So I've been trading that underlying order flow. However, as I told you guys, keep in mind what we're seeing in dollar. That recent strength in dollar is eventually going to weigh on indices. It may not happen right away, but over time it absolutely will. So what I'm monitoring right now, we're going to go to the daily chart and then look at the three averages comparably. And then here we see S&P took out this weekly high. Dow took out this weekly high, but we see Nasdaq failing to do so. So Nasdaq did not. Actually, why does that Nasdaq chart look like that? It's the previous month contract. There we go. And then we see here that Nasdaq failed to do so, right? So we see Nasdaq failing to make a higher high while these other averages did make that higher high. So that SMT by itself doesn't mean anything to me, but coupled with the fact that we're seeing risk off in dollar, which is a higher dollar, the fact that we've already repriced significantly higher on indices and we're taking out a high, rejecting it with an SMT. So that's just my internal dialogue at this point. I'm not saying the top is in, I'm just weighing those factors out. I'm going to wait for confirmation. I know if this is going to be a turtle soup, I'm going to get an order block that's going to form right after that turtle soup. And that would be validated with this candle here. After the order block, I know there's going to be a fair value gap in that price action if it's going to be good. So I'm going to wait for those specific signatures to come into alignment to confirm to me it's going to be bearish. So here we have this low and this daily fair value gap. As of right now, order flow is bullish. Fair value gaps support price and down close candles are supporting price. So as long as that order flow and market structure is going to remain bullish, I have to stick with what the market's giving me. However, if we do violate this low and we trade through this down close candle and we close down below this daily fair value gap, that would be absolutely bearish. And then I would look at that as a bearish quarterly shift going into these next few months looking for lower prices. So that's how I'm weighing out all that information, looking at the SMT and then how we reject it aggressively down through that. So what I'm going to be watching is how we trade inside this down close candle and seeing how we trade inside this daily fair value gap. Because you guys can see clearly when order flows bullish, down close candle support price and fair value gap support price. When that changes, that's how we know we're likely going to see a changing of the tide. All right, so with that in mind, that's going to be it for E-mini S&P. And with that, I'll transition right over to the Nasdaq now. So as you guys can see, Nasdaq's been in a really sloppy range as of recent. And what I've been saying is I want to see displacement on the daily chart, which is I want to see us leave this range either higher or lower. Reason being is because right now we're in a consolidation, and I want to see us leave that consolidation and enter expansion. I'd much rather trade those market profiles than consolidation. But as for right now, still have to trade what the market's giving me. So although it was a difficult month of March, still able to turn a profitable month. Only 2 red days for this month because I know how to manage the conditions I'm trading in. So because these conditions aren't conducive to ultra high probability, naturally I'm going to reduce my trade frequency and reduce my risk. And that's what allows me to be profitable even in difficult months. So absolutely crushed it in the month of March. Not an easy month, but very happy with the results based off knowing how to trade these conditions here. When it's not expanding, knowing it's consolidating, and knowing how to trade it accordingly. And again, trading live every week, sharing how I'm taking on these markets, what it is that I'm looking at. So with that, we have this daily inefficiency here. Again, want to see how we trade there. We have a key SMT, and we're just still in a consolidation. So as long as we remain in this consolidation, I'm not going to be here every day trying to guess higher, lower, higher, lower, higher, lower. I want to see us leave this range. Gun to my head, lower, but we do have now these stacked equal highs. And you can see that more clearly on a 4-hour chart, right? We have equal highs and equal lows. So that is lower probability by my definition. So I'm going to have to wait for more clarity to see where we're going to go. So I either want to see one of these liquidity pools taken out to the upside or to the downside. And then from there, we'll have left that consolidation and start moving again. And then from there, I'll have more clarity relative to what I'm going to be looking at longer term. And then again, looking at the hourly chart here, we're still just in this choppy market structure here. So we're hanging out inside the new week opening gap now. We have equal highs, equal lows. That's the definition of low probability. So I'm going to have to see what we have going into London session, what we have going into New York tomorrow, qualify that with what I'm seeing in dollar, and then that'll tell me what it is I'm going to be looking at tomorrow. And you guys can see these aren't easy conditions to call. So I have to wait for all those data points to tell me what I'm going to be looking for going into tomorrow's session. So don't be fooled or misled and think every single day, I know the bias, I know what trades I'm going to be taking, I know exactly when it's going to form. A lot of times that's what my trading looks like when it's clean on a higher time frame. But when it's not, I have to submit to waiting for more information. And you guys can clearly see that in this market structure here. So last thing I want to leave you guys off with on the daily chart, if that SMT holds and we start to break down through this daily fair value gap, first target would be this down close here, the bullish order block. If we melt through that, we have the sell side. And then if we get animated through that sell side, we have these equal lows here. So that's what I'm going to be considering moving forward if we're going to see that weakness hold. However, that's going to have to be met with stronger dollar. And then again, I'm going to want to see that SMT in a premium hold if we're going to start working lower and see a subsequent quarterly shift. But again, the big thing is right now, I need to see the market displace out of this range. And then once we do that, I'll have that clarity. And then last things for today will be the Dow. So seeing how Dow traded above that high here, really similar to what S&P did, right? Taking out its high and smashing lower. So looking at Dow, high taken out and then smashing lower. So seeing how we close down below this fair value gap here, that's bearish to me. So if we see this as an inversion fair value gap and we break down through this low, we're likely going to want to work down into this fair value gap here, this fair value gap here, and then we have all this sell side liquidity down here as a downside target after we've closed down below this fair value gap. So we're going to look for further bearishness in indices as long as we get those factors that I'm looking for. So with that, guys, that's going to be it for today's. Again, apologize for those technical difficulties we're having on YouTube, but that was on YouTube's end. But nonetheless, still getting the video out here so you guys know what it is I'm looking for going into this week. As always, if we see any changes or any updates that we feel are salient, we will get those to you guys in a timely manner. So with that, guys, have an excellent rest of your day. Good luck and good trading. Take care, everyone.